We knew that that was our ticket out of the rat race. And so we went all in on that, spent $30,000 on a coaching program. That was more than my master's degree. We aimed for anywhere between 15 to 20%, but we just, we did our first full cycle in December 2023, and we earned our investors 24% averaging. That completely depleted our cash flow and future cash flow. And so we started to realize, okay, what next? What can we do?
Hey guys, this is Sharat, host of the REsimpli podcast, bringing you a very special guest, Savannah Arroyo, on this podcast. Savannah, welcome to REsimpli podcast. How are you?
Hi, I'm doing great. Yeah, stoked to be here. Thanks for having me.
Absolutely. Thank you so much for being a guest. Really appreciate you taking time. Tell us a little bit about yourself. Where do you live and what kind of investing do you do?
Yeah, so I am a registered nurse. I really went right out of college into pursuing a nursing degree, had my eyes set on becoming a CNO, a chief nursing officer. I loved process improvement and operations. And so really shortly after I graduated and started working in the field, I started climbing the corporate ladder. I went back to school. I got my master's degree in nursing leadership and administration, and started working for a large healthcare organization down in SoCal, and started that grind. But it really wasn't until the beginning of 2020, after having my second daughter, that priorities really started to shift. My husband and I were looking at our really high demand Monday through Friday jobs, and it wasn't really allowing us the freedom and flexibility that we wanted in our daughters' lives. And so it was really at that point setting to Google, like, how to build wealth, how to invest, how to generate passive income. And over again, we kept seeing real estate investing, real estate. And so dove all in, started binging Bigger Pockets, podcasts, YouTube, books, reading everything. Joined a formal coaching program early on, how to do syndications. And so right now we partner with other healthcare professionals to invest in apartment complexes.
Wow. So you went like all in. You decided you went all in. That's amazing. So this wasn't, so your primary reason was you wanted to have basically freedom of time and money. And then it's kind of very similar to my journey. I wanted freedom of time and money back in 2010. And when I Googled, it just real estate kept coming up. But when you started, you're doing syndication apartment complexes. Generally that's a natural progression for investors that have done some investing and then they eventually want to get into that. But you started out buying apartment complexes.
So we did buy two long-term buy and hold projects across the country starting out. So when we started, we didn't even have any money to start investing at the time. And it took really talking to people in the space, listening to stories, to realize that we had $100,000 worth of equity in our primary residence. Didn't even know what that was at the time or how we could use it. And I was talking to a savvy mortgage lender who was telling us, oh, you could use that and then use it as a down payment on investment properties that not only pay for themselves, but now earn you cash back every month. Cash flow at that point, we knew and understood the terms. And so we took the second mortgage out on our primary residence, bought two build to rent projects across the country in Atlanta, Georgia. At the time, we were based in Los Angeles, California. So bought them sight unseen, build to rent projects. They were new developments that the company then places a property management team in-house. And so it's very easy for a first-time investor to get started doing that. But those investments were only collecting us about 100, 200 bucks a month in cash flow. And it took that first tenant moving out at like the 6-month mark, and we had to repaint the entire house, which was like $2,000, that it completely depleted our cash flow and future cash flow. And so we started to realize, okay, what next? What can we do? How can we still invest in real estate? And that's when we started learning about syndications. And at that point, we went all in.
And so just walk me through your first syndication deal. So you find out about syndication, then you join a coaching program. Is that what you did?
Yeah, exactly.
Okay.
So we were both working full-time, demanding jobs. And so for us, it was worth it. When we first discovered about real estate syndications and how we could grow a business about it, we knew that that was our ticket out of the rat race. And so we went all in on that. Spent $30,000 on a coaching program that was more than my master's degree. But for us, we threw that on a credit card and knew that if we were going to be raising capital and investing with friends, family, people we work with, that we wanted to be going about it the right way, working with people with experience who are overlooking our shoulder at all of our underwriting, our transactions, everything.
So for those of us who are listening, don't know what syndication is, can you just give a brief summary of what that is?
Yeah, exactly. So real estate syndications are people pooling together their resources so they can go out and buy a property that they otherwise couldn't afford on their own. For example, apartment complexes, self-storage, mobile home parks, commercial real estates like shopping malls, strip malls, that type of thing. And the opportunity in these syndications is huge because it allows people who want to be active, who are called the general partners or the JPs or the sponsors in the deal, the lead operators. Those are all terms you'll hear frequently for the same role, the general partner, the JP. They take a very active role. They're out finding the deal, getting the financing for the deal, putting it all together. And then the passive investors or the LPs, the limited partners, get to come in the deal and they're just putting up capital. And the benefits for them is they get to receive some of the amazing returns that real estate investing has to offer that far, outperform the stock market historically year to date, and also allows them to receive a lot of the tax benefits that are involved with investing in real estate while being completely passive. So this is great for healthcare professionals who work high demand jobs, but they're getting high income. They can take that high income and start putting it in an investment vehicle through these syndications that's now earning them great returns so that they could start offsetting the income that they're earning at that W-2, which creates that freedom, that financial freedom.
So in this case, you and your husband are the general partners, right? You are more actively involved. You're raising money and then you're going out and finding deals for limited partners who would be healthcare professionals. Is that correct?
Absolutely. Yep. So
Okay.
we're flipping apartment complexes really in like a 3 to 5 year period. So really huge opportunity in real estate investing through value add opportunities when you can go in there and force appreciation. And so we look for apartment buildings that are maybe held in the same family for generations. It's not performing at its optimal level. There's ways to improve rents, and we go and find these value add opportunities and we raise the money from investors for these operating reserves. Sometimes we're buying from owners who they need to replace the roof, but they don't have the operating reserves to do that. And so they would rather just sell the property than to do it. We've bought apartment complexes with rents that are 40% below market value just because the previous owner didn't raise them up adequately. And so seeing opportunities like this with our investor eyes on, we create a business proposal for our investors. We're usually around 3 to 5 years. We're aiming for 100% ROI, so return on investment for our investors. Our average investment's about $50,000. And with that, we're looking to give that initial $50,000 back plus another $50,000 on top of that. So that's around 100% ROI right there. And that can be seen anywhere between 15 to 25% average annualized returns. And this is the number that you'd want to compare to the stock market, which does historically around like 6-7%. So as you can see, it's just an alternative investment strategy that people can invest in to grow their money at a way better rate.
You live in Northern California. Where are you buying these apartment complexes?
Yeah, so we have 6 apartment complexes right now up in the Oregon market, up in different tertiary markets up there. We love the tertiary markets because very low housing ownership. So meaning that the majority of the people in the market, they have to rent, and inventory across the country is just at an all-time low. And so it allows us opportunities to raise rents. We see less than 5% vacancy on all of our buildings up there. And then we also have a self-storage facility down in Arizona.
Okay. And how are you finding these deals?
Yeah, a really good relationship with the broker. So early on in the space, it was kind of, it's hard to get brokers in multifamily commercial real estate to take you seriously. They want to see that you can do a deal. I mean, they're very large transactions. And so early on, it was talking to a bunch of different brokers in the area, and we have bought in 7 apartment complexes with the same broker up in Oregon who we did our first deal with up there, and he actually sold one of them. So we've done 8 transactions with him in the last 4 years. It's crazy, but relationships are so very important in real estate.
So it's 7 purchase and you've completed one like complete cycle of buying
Yeah.
and selling. Okay. And what's the average price of these apartment complexes that you're buying?
Yeah, so they're mid-range, so anywhere between $1 to $5 million. Our smallest building's 12 units, our biggest one's 36, so mid level buildings.
Okay. So like 10 to 50 units is kind of your sweet spot.
Yeah,
So then your idea is to buy something that's underperforming, adding value, and then basically flipping them in 3 to 5 years.
yeah, exactly.
Okay. You said your average investment that you raise is 50,000. Is that the minimum that you require someone to put in?
25, we'll go down to 25,000 depending, but usually 50,000, that's what most of our marketing materials see. Mhm.
Got it. And do the investors need to be accredited or not?
So no, we have it open to unaccredited investors as well, meaning we do 506B filings with the SEC. So for anyone who doesn't know the difference between an accredited investor and an unaccredited investor, some of these syndication deals are only available to accredited investors. And most of the time, those are the deals that you're seeing that are publicly solicited on social media or on the internet. You'll get ads or emails for them. Those are usually 506C deals, meaning only open to accredited investors. So to meet an accreditation status, you have to make over $200,000 a year or have a net worth liquidity of $1 million, excluding your primary residence, or over 300,000 a year if you're filing joint with a spouse.
Got it. And so is your goal always at least for next 2 to 3 years just to keep flipping apartments, or do you see eventually holding some for long-term wealth also?
Yeah, both. So we do have some longer type holds. So our storage facility is a 10-year hold with potential for infinite returns on that one. We do have most of our investors who are looking for that quick ROI on capital. So we'll continue to always do those shorter flips in a sense with the apartment complexes. But in order to, as we build up our personal portfolio, we do plan to have some small multifamily in there that we plan to buy and hold.
How did you go about raising money from that first investor?
So that was pretty tough. And one reason why I started my personal brand Net Worth Nurse is I loved the idea of syndications, but I
Which is a
didn't.
great name, by the way.
Oh, thank you.
Yeah.
I loved the idea of syndications, but I didn't feel comfortable in a sense asking people for money or to jump in these investments. Like I hated the sales aspect of it. And so, but I was so sold on syndications. And for me, it was a huge mindset shift of now providing these investment opportunities, enlightening the healthcare professional field that these type of investments do exist. They are an amazing way to build wealth that aren't only reserved for the mega wealthy. I mean, some people think that these investment opportunities are really reserved only for the rich. And so for me, when I started learning about them, I'm like, I want healthcare professionals everywhere to know that they can invest in these type of syndication deals. And so I went about it in the most genuine way possible of creating Net Worth Nurse, my Instagram handle and my social media brand, and just giving people an inside look at my story. Like from day one, 4 years ago, when I started out on this journey, raising capital, doing deals as I was working full-time as a registered nurse, like my life as a mom. And really just the transparency has gone a long way as I've been raising capital. To date, I've raised over $5.5 million, mostly from other healthcare professionals. And I've done that primarily through social media. Podcasts are huge too. I have a lot of people who reach out that hear me on podcasts, but yeah, it was tough at first. I mean, so when we did our first raise, we sent out like a feeler to our friends and family, like an email list of like 30 people, right? Just saying, hey, this is what we're thinking about doing. We had just bought those buy and hold properties. As I said, although we ended up losing money and cash flow in them, how powerful real estate investing is. Those two properties still appreciated so much in the year and a half that we owned them, that we were able to sell them both like less than about a year later with a profit of 70,000 each on those two
Oh,
new
wow.
built townhomes. So just, I mean, crazy the way real estate investing works. But anyways, we sent out an initial feeler email to our friends and family just saying, hey, this is what we're doing with real estate investing. We want to open it up and do a group type syndication deal. We could all go out and buy this apartment complex together. Here's our business plan with it. Here's what we think the financial projections would look like. Are you in? And to be honest, it was mostly crickets. Only a couple people. I mean, we didn't really come from a network of high net worth individuals, people who had $50,000 to invest in these type of deals. And so it was a little bit discouraging at first, but then that's what motivated me to push with the social media brand so that I could really create a platform to start talking to more and more people about this. So really took a while to push myself then out of the comfort zone with the social media aspect of things. But now that has allowed me to raise a lot of capital for these deals.
What does a typical entity like the deal structure looks like? So are you guys also putting, you and your husband also putting some money in, or are you bringing your knowledge and experience to the table and only the limited partners, in your case, nurses and doctors, are the ones putting money in?
Yeah, no, so we always contribute to our deals financially. We always put up the what is called the risk capital. So the capital that is put up in the early stages of the transaction to like a earnest money deposit, and then different things with the financing team as well. So we do contribute capital to all of these deals. Everyone on our general partner team always does, but it is mainly we buy it in an LLC. So we purchase every apartment complex or building in an LLC, and everyone owns a portion of the LLC based on their capital contribution. So we do an 80-20 split. 20% goes to the general partnership team. 80%, meaning the majority of the investment, is owned by the limited partners, the passive investors in the deal. And so then based on how much capital they're contributing, that's what percentage of the LLC they own. And then that determines their cash flow on a quarterly basis, and then also how much proceeds they get at sale.
Okay. And are you paying out monthly, quarterly, or at the end of the project?
So we do quarterly. We purchase only cash flowing assets from day one. So meaning that all of our investors, once we close on an investment, they're receiving their first distribution within the first 3 to 6 months. And then the majority of the proceeds are seen at the sale of the building, or if there's an opportunity for a refinance early on, then at that point we can return a good chunk of the investor's capital back.
Okay. So if I understand correct, so just correct me, I'm going to try to run through an example. Let's say if you're buying an apartment complex for $1 million, right? And I contribute 900,000, you put in 100,000. So we buy it for 1 million. And let's say the return for year one is $100,000, right? You will have 20% as general partners, and then you will also have 10% of the remaining 80% as limited partners. Is that correct?
Correct. Yeah.
Okay.
Exactly.
So of the $100,000, we take the 80,000 that goes towards general partners. And of that 80,000, 90% of that will come to me. 10% will go to you, right? For the limited partner. And then the remaining 20% will go to you for your service of buying the property, managing, and doing all of the other work related to it.
Correct. Yes.
Okay. Got it. Okay. And then
The only difference
annual
in that scenario is we leverage debt in all of our deals. So we're getting huge amounts of financing, which is, again, how we push returns for investors. So we're usually coming in, like for a $1 million property, we'll come in at about $350,000 cash to close, and then leverage the rest from a loan from a bank.
Oh, I see. So you have lending, like financing in place when you buy the property.
Yeah, exactly.
Okay, I see. So $350,000 would be the total capital you would need, and the other is just funded by a long-term, like conventional lender.
Yeah, exactly.
Okay, wow, that's even great. And then the investor can expect to see about 15 to 20, maybe 25% ROI once you annualize IRR, annualize rate of return, by the time you sell the property.
Yeah, exactly. We aim for anywhere between 15 to 20%, but we just we did our first full cycle in December 2023, and we earned our investors 24% average annualized
Wow,
return.
that's amazing. What's your biggest challenge in fundraising right now? Is it, you don't have a big enough network right now, or people are still hesitant about it, about this investment opportunity? What sort of challenges do you run into?
Yeah, for me, the way that I did it with healthcare professionals is that the majority of them are very new to these investment vehicles. And so it does take quite a bit more time for education and still understanding this investment vehicle in totality before they want to make an investment. And so I think that makes it a little bit harder. It just makes the length of time, I think, to raise capital a little bit longer than if I were to target a different persona or avatar that was a high net worth who potentially had the money, knew about these investments, like family offices type things. So the way I go about capital raising, I think, is a little bit different just because of my market. But I think overall, the hardest thing would just be time.
Just the time. So someone listening to this and they're inspired by your story and they want to go out and start raising some capital, start doing syndication, what would be the number one thing you would tell them to do and also not to do?
I would say to be very clear of like the mission vision of what their goal with what they're trying to communicate and who they're trying to target in terms of their like avatar or persona. Because that will make it very clear on the messaging and different tools and strategies that you're talking to with them specifically. I think as you're going out into this, there's a lot of noise, there's a lot of competition. It can be very easy to get discouraged. So the clearer you are with where you want to go, it'll make it easier to get there.
What's your biggest challenge right now with what you're doing? Is it the funding? Is it the deals?
Right now, I would say more maybe the funding piece of it. Just with like the interest rates over the last couple of years where they've been, and then the housing prices still hadn't come down to correct it. But we're seeing more and more movement. I mean, we're getting ready to sell 2 more of ours in the next couple months, and then we plan to purchase another one Q1 2025. So we plan to still, I mean, continue through our transactions for the rest of the year and beginning into the next year. But yeah, I mean, it's just as things change in the economic landscape, it's just continuing to educate yourself through conferences, listening to podcasts like this, YouTube videos, staying up to date with what's going on out there.
So what's the biggest risk that an LP has, person who's bringing money to the table, that they need to be aware of?
So the biggest risk is that they lose their investment, which compared to other real estate investing, where say for more instance, like if I were to go out and buy $1 million house and I get a loan for $1 million, I'd be liable for that full $1 million loan, even if I'm putting $250,000 down for that down payment. Whereas a passive investor in these syndication deals, you're only liable for your investment. So say even if you're contributing $50,000 to a $5 million building, if something happens to the building and it becomes at fault, you're not liable as a limited partner in the deal. You're only liable for that 50K that you could potentially lose. But I mean, I tell my investors like the worst thing that would happen is that it like burns down, but we always get amazing insurance on all of our deals. So at that point, it would just be waiting for our investors until things get built back up type thing. The cash flow could be paused for a certain amount of time. But yeah, I mean, even I have investors who like, if they think, oh, well, what if I need access to that $50,000 or $100,000 that I'm going to invest in that time before the investment comes to fruition? I mean, for me, I always kind of have a running list of investors, and at any time, any of my investments, I could get a fair market value of the property at that exact moment and tell you what an investor's investment is worth. I mean, you could potentially sell that. General partners could come in and buy that. So opportunities there as well.
Okay. Yeah, that was going to be my next question. So let's say if I put in 100,000 and 2 years later, I'm like, oh, I need this money, for whatever purpose, then you would give me based on whatever the market value is at that time, because the value of the LLC now has gone up because of the asset that it has.
Yeah, I mean, ultimately, as the general partners on the deal, we own the right to reserve what would happen. I mean, ultimately, the funds are locked up throughout the lifetime of the investment. But I mean, I do understand extenuating circumstances and emergency and like life happens, and the fact that we are always raising capital for these deals, it does make it easier when things like that. It has never happened in any of our deals to date, but if it were to happen, there are ways that we could bring in other investors to make that investor whole.
And how did you go about picking Oregon for investing? Is it the proximity to where you live?
Yeah, well, it really started out just curiosity. We were up there running numbers and getting practice because it's kind of just a numbers game at first. And I have family up there. And so we were just looking, we knew some markets and started stumbling across good deals and found a 12 unit that looked amazing, great value add up there on the Oregon coast. And we ended up closing on it. And so since then, as I mentioned, that same broker has gotten us deal after deal after deal after that. And so it's really just been the relationship that has driven that portfolio.
I said, do you plan to stay in that market or do you plan to expand out of that market? I would imagine Oregon is not the most landlord friendly market to invest in. Is that correct?
Yeah, I mean, we've never had any issues with it. We've had to evict tenants. We have had no issues raising rents. There's no cap when people move out. So for instance, on one of our buildings, we had a tenant move out last week and we're raising rents up over 8% up to market value on there. So there's no caps on that. I think the yearly cap's like 9.2 that you can raise, but none of our business plans are raising rents over 9% year over year. That's very, very aggressive. So it works for us and all of our business models. It's never been an issue with tenants in that respect. But yeah, I mean, we love the market. It's performed very, very well, even throughout the COVID-19 pandemic. We've had really great success with our buildings and the vacancy rates that we see up there. We have great teams in place. So we'll continue to build a portfolio up there, but we're always open to other markets. We're looking at right now in Belize, like out of country. Arizona still looks good. We see things in the South sometimes, but really honed in on the market that's working for us.
And what's your vision, like 2 to 3 years down the road? What do you want it? Where do you see the syndication business going? Where do you see your personal brand and then your personal portfolio going?
Yeah, continuing to build. So to date, we've done around like 2 or 3 deals every year over the last 4-ish years. So continuing really at that rate. After 3 years, both my husband and I left our full-time jobs, our full-time W-2s. And so we have so much more time freedom now with our family, and that's really what we were striving after. So it can be easy to replace all of that time freedom and empty space with more work, for sure. It can be hard to turn it off sometimes, but we're really focused on just that work-life balance, but always continuing to do deals. I connect very regularly with healthcare professionals, and we have more and more family and friends that are interested in these deals. So we'll continue building.
Yeah, I would imagine once you complete a couple of deals and you have returned money to the investor, then it just sort of people start coming to you and like, hey, of course, the investors that made money, they're like, okay, just reinvest my money. And they tell their friends and family, and then your network just keeps growing from there. I'm sure you've started to see that in your business, right?
Oh yeah, absolutely. I'm very surprised at the people who reinvested. And then also a huge strategy that I share with healthcare professionals is the ability to invest with retirement accounts. A lot of people don't know this, but if you leave an employer and you have an old retirement account that's just sitting there collecting dust, usually with a click of a button, you can go in and convert it to a rollover IRA. I did this when I left Fidelity. With a nursing job, just click it over to a rollover IRA. And then what most people don't know is you can convert it into a self-directed IRA. These have been around since the 70s, a long, long time. Still, a lot of people don't know about them or use them, but really what they do is they allow investors to have more ownership and control over their investment. So, I mean, that's part of the reason why a lot of people don't use them. They don't want all that responsibility, right? But if you have one of these old retirement accounts and you're interested, say, in one of these real estate syndication deals where you could be potentially growing those funds at a way better rate. I mean, anyone who knows compound interest, if you have $100,000 that's growing at a rate of 6% versus 24%, I mean, it's astronomical what that will do for your returns in 10, 20, 30 years. So really educating healthcare professionals about that different way to invest is really cool.
Yeah. Just quick technical question. Can you also do self-directed Roth IRA, or is it only self-directed traditional IRA?
I'm not 100% sure. I always use the term rollover.
Okay.
So not 100% sure if they would do that. I work with an amazing company called Horizon Trust. Their information's on my
Oh yeah,
website.
they're
And
the
they
best.
do,
Yeah.
yeah, they do intro calls with anyone interested. So
Okay. Perfect. Awesome.
yeah.
Looking back, I mean, you guys have done incredibly well in last 4 years. What's the biggest mistake you've made over the last 4 years?
Oh man, I think probably trying to do too many things. Especially in this real estate space, like if you're listening to podcasts, you hear so many good ideas and you want to do it all. I started doing Forex trading. I did a Turo car rental. We started doing midterm rentals on Airbnb. So got kind of caught in a lot of different strategies, which I mean are always lessons learned and continuing to grow through those. But I think really there's something to be said about narrowing in on what you're already doing and growing what you already have, as opposed to trying out a bunch of different strategies.
Looking back, what do you see over the last 4 years that you've done? And you're like, man, if I could go back, I would want to do more of this. I wish I'd done more of this.
Well, Instagram hit a rhythm during the COVID pandemic where everyone was on social media, like everyone. And I got pretty lucky at that time doing reels in like 2021 and was able to grow my following pretty big. But I think if I would have like doubled down on social media in that
Right.
small time frame, like that year, 18 months, especially on Instagram, could have hit really hard. But I don't know. I never really have any major regrets. Like I love learning, and I think that's what pushes me into real estate investing and wanting to be an entrepreneur is like, with real estate investing, stuff goes wrong every single day. Like you're problem solving
Absolutely.
new things, like nothing goes as planned and you have to get creative and try and figure out how things work. So I love that part of it.
Yeah, sometimes that's the best part about being a real estate investor. Like every day, it's a different day. It's not like going to, an assembly line where you're making the same thing. I mean, nothing wrong with that. But just like with real estate investing, every day is like a new challenge that you're doing. Sometimes it could be great. Sometimes it could be like,
Yeah.
oh man, I hope today's not the day when I'm facing this. But yeah, no, Savannah, this has been absolutely incredible. Thank you so much for sharing your knowledge, your wealth of experience that you have. Last three questions for you. You've built an incredible business in the last 4 years, and you said you have two daughters,
Yeah. Mm-hmm.
right? What do you do for fun?
Yoga, meditation, go to the beach, arts and crafts.
Nice. Yeah. How old are your daughters? One is 4, right?
4 and 6.
4 and 6. Yeah. I have a 4-year-old daughter too. She was born in COVID, July 2020. Yeah.
Yeah.
Cool. Yeah. What's the one book that's had the biggest influence in your life?
Oh, I'm gonna say Think and Grow Rich.
Oh
That
yeah,
just really
classic.
changed my thought process around money. But I do want to give a special shout out to the 4 Hour Work Week, Tim Ferriss.
Tim
I've
Ferriss.
never
Yeah.
read this book. I know it has been around for, I think, multiple decades at this point, and I'm so upset with myself that I did not read this sooner. Like the 4 Hour Work Week. I'm very stuck on this book right now.
Absolutely. It's an amazing book.
It is.
Final question. If you could spend a day with anyone dead or alive, who would you want to spend the day with and why?
Ooh, I hear this question asked all the time, and I've actually never answered it, which is funny. I'm gonna say right now, Brene Brown. I love her teachings, and I'd love
Oh,
to
she's
sit down with
amazing.
her. Yeah.
She's amazing. Yeah. Savannah, thank you so much. Anyone listening to this, if they want to connect with you, learn more about your journey, what's the best way for them to do that?
Yeah, social media, The Net Worth Nurse. I'm very active on also social media handles. So Instagram, Facebook, YouTube, Twitter, yes, even TikTok. And networthnurse.co is my website. And then also willowinvestmentgroup.com is our website if you want to learn more about the real estate syndications.
Perfect. We'll put links to all of that in the show notes. Savannah, thank you so much for coming on the show and sharing your experience. Thank you.
Amazing. Thanks for having me.